Hello, welcome to the morning download weekly Q&A. This is actually the first one that I've done, getting some bugs worked out. My computer just crashed when I was just started this. So if you want to send questions to the weekly Q&A, then go down below to the link below to morning download, subscribe. If you're a subscriber, you can respond to any issue, and I will include questions in the Q&A. Today, we're going to cover three questions we had. One is about dividend stocks, which people love. We have a whole separate newsletter about dividend stocks called Dividend Download. Two is about the debt ceiling. And three, somebody asked, should I be looking at conventional stocks and bonds, or should I be looking at crypto? And I will break out some of the recommendations from different banks. First of all, let's start with dividend stocks. Should I invest in dividend stocks? The question was from Otis. He wants to know if investing in dividend stocks is outweighed by the gains of investing in growth stocks. This is a common question in the financial field is, if I invest in dividend stocks, then I get those dividends, but a growth company reinvests the dividends. So basically how it works is generally a company that pays dividends is considered more stable. They're stable enough that they can pay the dividends, and they pay those dividends pretty consistently. If you go to Morning Download, we've got a whole section for dividend stocks. You can do a dividend screener, look for all of the top companies that pay dividends, and screen out the ones you like. There are a lot that have paid dividends consistently for 20 years and even up to 50 years. So they're very stable companies. But it also means that they're paying dividends because they can't put that money to better use, which is why growth stocks, in particular tech stocks, don't pay dividends, because they can reinvest that money to grow quickly. So that's the trade-off between dividend and growth stocks. Dividends, the advantages are you get consistent income. So if you're retired, if you're planning on retiring soon, then having a portfolio of dividend stocks is great because it's consistent dividend income. And also it has tax benefits. In some jurisdictions, the qualified dividends may be taxed lower than regular income. So especially, again, if you're retired, having dividend stocks means that you could be potentially taxed lower for that income. And then thirdly, it's stable. Though the companies that pay dividends are considered more stable. The downside of investing in dividend stocks is the growth limitations. Because they're not reinvesting that money, then the companies tend to not grow much. Think of a utility. That's the classic dividend paying stock. Utilities aren't really growing much. They pay out all of their profit to shareholders as dividends. And then some companies cut dividends. That's the bad sign. When a company cuts dividends, they want to stay consistent and not ever cut dividends, so they can make it into the dividend kings, which are known for a long track record of cutting dividends. If you want a list of those, then you can go to Morning Download, download.com. So on the other hand, if you're investing in growth stocks, the advantages are it's basically all the opposite. You've got the capital appreciation, you've got higher long-term returns potentially, but the disadvantage is the volatility. If you are retired, you may not want that volatility, and then you've got no income coming from that stock. So it's not a question of which one is better, a dividend stock or a growth stock. It really depends on your situation and what you're looking for. Are you looking for stable cash flow, or are you looking for an investment you can just put money aside and not use it for a long time and sell it later? That would be more appropriate for a growth stock. So Otis, I hope that answered your question. Let's go to the next one about the debt ceiling. This is something that's come up just recently. It comes up about every 3 to 6 months in the United States, and Congress has to raise the debt ceiling, and then they're fighting within each other. Each party's fighting for whether it should be raised or not. So why would you raise the debt ceiling, or why would you not raise the debt ceiling? Some reasons why you would eliminate it is you want economic flexibility. If there's no debt ceiling, then Congress can spend, they can borrow money as they need to. They don't have to wait. Things don't get slowed down. Number two, avoid any default risk, which the U.S. has struggled with, and that can affect our ratings, our credit ratings, and it can scare the markets. The last time this was debated, whether we're going to raise the debt ceiling or not, the market got nervous, and the market tanked a couple, maybe not tanked, but it went down a couple of days before or during this debt ceiling showdown, because the market's always risky. Are they going to raise the debt ceiling or not? Are they going to cut entitlements? What are they going to do to avoid raising the debt ceiling? And then there's all this political turmoil. So if you eliminate the debt ceiling, you don't have that political turmoil. And then secondly is fiscal policy management. Without debt ceiling, hopefully the fiscal policy would be managed more directly and more and better through taxation and spending decisions, and there'd be a lot more transparency. And then the downside, of course, is that that doesn't happen, that the debt ceiling is raised and the Congress just keeps spending more money, and the Fed and the Treasury print more money to pay for everything. And then that would lead to inflation. So that's the big risk. And it's a valid risk of eliminating the debt ceiling, is that we would continue to spend like drunken sailors as we've done the last decade. And then that would not be great for market confidence or long-term debt stability, and it would have a lot of political implications, as politicians are seen as spending a lot of money. So, so would raising the debt ceiling or getting rid of the debt ceiling increase inflation? It depends. It depends on how the spending is managed by the Congress, the Fed, and the Treasury, and whether or not that would raise inflation. It wouldn't necessarily, but it could potentially. And then the Federal Reserve would have to play a role in mitigating interest rates. So they would have to, if there was no debt ceiling, the Fed would have to continue to mess with interest rates, which people don't really like. And it could be good or it could be bad. So those are the pros and the cons as I see it. I'd love to hear your comments. Comment below whether you think eliminating the debt ceiling is a good idea or a bad idea. It seems like that's something that people are pretty divided on. So I wanted to give both sides of that. And for the last topic today was a question. That last one was a question from Steve. This is a question about what you should be investing in, especially during this bull market in crypto and bull market in stocks. Is should I be investing in traditional equities, or should I be invested more in crypto, in particular Bitcoin, since Bitcoin is the highest performing asset class 11 out of the last 13 years. So it has been on a run. It's very volatile. So the first thing to know, and I've been an investor in both for a long time, is that if you're going to invest in crypto, especially the tokens that are down the list that are more on the risk return end of the spectrum, you have to have the stomach for it, because it can drop. Bitcoin has had a phenomenal average return of about 134% the last few years, and it's projected to maybe double. By a lot of analysts and a lot of banks project that it'll be somewhere between 200,000 and 250,000 at the end of this year. But it also has been known to go down by 50% or 80%. Those drawdowns probably won't happen as much going forward, because there's so many institutional investors now, and governments and states are looking at it. 12 US states are now looking at adding it to their treasuries. The US government is now looking to add it. There was just yesterday, President Trump signed an executive order allowing banks to custody Bitcoin for their customers. So it's becoming a lot more accepted, a lot more mainstream. So I wouldn't go all in on either of them. Of course, this is not financial advice, but I want to show some, just tell you some of the things that big banks are saying of how much Bitcoin you should have in your portfolio. BlackRock says that they recommend an allocation of 2% Bitcoin. Fidelity recommends between 1 and 10%. Morgan Stanley, BNY Mellon, JP Morgan, and Standard Chartered are some of the banks that also recommend having some Bitcoin in your portfolio. If you want to know what adding some Bitcoin to your portfolio will do, then go to nakamotoportfolio.com, and you can actually model how that will affect your risk reward, your uh, your ratios or your expected return, and you can play around with that. And in most cases, it will actually, the model will show that you're going to increase your return and decrease your risk. Like I said in my last video, the Sortino ratio is actually lower in Bitcoin than gold and the S&P 500. So it's volatile, but volatility isn't the same as risk, and it is seen to be highly risky because it's volatile. But that volatility gives you the return. So it's something that you may want to look at, adding a portion of your portfolio into Bitcoin so you can get that extra return. And just an example of some of the things that other prominent financial people and banks are saying about Bitcoin now that it's become more mainstream to think about when you're thinking about whether you should add some to your portfolio. Consider that Ray Dalio, he's the founder of the hedge fund Bridgewater, said on CNBC just this week that he thought Bitcoin can reduce risk in your portfolio. And he said that he thought owning Bitcoin was an interesting thing to look into. And second, the Bank of America CEO, Brian Moynihan, says that banks will come in hard to crypto if they get regulatory approvals necessary to reduce risk, which is what happened just yesterday. I got a question from Dark, asked what dividend rates are worth considering. I think it depends on what your goals are and looking at what companies are doing well and how long they've been paying the dividend. So if it's a question of whether you keep it in cash or put it in a growth stock, the rate really depends on what your goals are. But I would say 8% or above. If you look at the dividend kings, if you go to morningdownload.com, you can see a whole list of dividend kings on there, and you can see a lot of them are paying 5+ pretty easily. So look at that list, and you can see kind of what the market is doing and what percentage people are paying. Going back to Bitcoin, the Goldman Sachs CEO said that he doesn't believe that Bitcoin is a threat to the dollar. A lot of banks are saying this now, that they're two separate things, the dollar and Bitcoin. Bitcoin is seen more of a threat to gold than anything else. And then the SEC recently announced a new crypto task force led by Hester Peirce. Some people say Pierce. And they are making crypto a lot more acceptable to Main Street investors, especially those that are frightened that the US dollar is being debased, which has been debased about 25% over the last 4 or 5 years during the pandemic, as the US has printed a lot of money. So CEO of BlackRock, which is the largest asset manager in the world, said that if you're afraid or you're seeing your asset being debased, your fiat currency, the dollar, being debased, then it's something you should look into Bitcoin. So those are some of the things that the banks are saying about Bitcoin and adding it to your portfolio. What do you think about that? I know a lot of people, especially people in retirement or planning their retirement, which are a lot of people that watch this channel, are a little skittish about Bitcoin and not really excited about it, especially after the last bear market. Considering that a lot of the major banks, most that I know of or have researched, actually recommend including Bitcoin from 1 to 10% of your portfolio. Do you think that's wise, or does it make you nervous? So thanks for watching. If you've got any questions about this, drop it in the chat or subscribe to the newsletter at morningdownload.com and submit your questions there for next week's Q&A. Have a great weekend. See you.